Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, February 1st, 2010. Well, February has gotten off on the right foot so far today as the Dow is up 90 points on the day, the Nasdaq is up 18, and the S&P 500 up about 11. Basically, 0.8 to 1% across the board gains in the market, and we are seeing the market just fading ever so slightly off the highs of the day right now after a solid move. Now, this solid move is coming on the back of some ugly market activity over the last 2 weeks. We've basically seen a 7% decline in the last 2 weeks on the markets as things just tumbled. You could be any portion of events from Obama's kind of stricter talk against the banks to China tightening lending to earnings announcements just not being up to par what Wall Street needed to continue higher. All of those contributed over the last 2 weeks to the fall, but you are seeing a solid bounce. Now, the bounce today is coming on the back of personal income and spending numbers coming out this morning, as well as Exxon Mobil's earnings. Exxon Mobil coming out better than expected, and you can see the stock here is trading to the upside. Now, I gave the alert last Friday in the last hour of trading to buy Exxon Mobil ahead of earnings based on the oversold conditions, technical analysis levels, and Chevron's ugly earnings from last Friday as well. That was all basically making it so Exxon would most likely be able to outperform earnings expectations and make a move to the upside. Sure enough, that position that the Research Center subscribers as well as the intraday stock chat subscribers had paid huge dividends today as the stock is currently trading up $1.75 on the day. Profits were taken, booked, you name it, it's in our pockets. Good old profits there, again, for the Research Center and intraday stock chat members. Now, let's go to the SPY and discuss what we're seeing here. Again, the market beginning to fade ever so slightly across the board. Overall, still, again, nice gains on the market. What you can see here is the market struggled right around these upper levels. Notice this level right here, this level right here, here, and here. You actually have higher highs here, but that's all evening out right to this level. See this high pivot from Friday midday or so? That move up before we rolled over hard. That level is being good resistance. If you're able to come back up through that level, you're going to go right here to the 200 moving average. Case in point, beautiful little setup right there if we do move back up. Right now, again, the markets are slowly fading back down. You're going to have very good support at the 50 moving average here at 108.45. And then right below that, you'll have a very nice little level at 108.30. 108.30 was a big level. We talked about this in the intraday stock chat per the open of the day. We talked about how you moved in below it, you tested it, pulled back. The next candle closed above it. That was a good signal. Then you have a 1-2 bar consolidation. That's a bullish signal. Sure enough, to the upside you go. You come back in, retest that again. Right up it goes. Come back, almost retest it, and then go up even again. So you can see how this 108.30 white trend line, which, by the way, coincides with this level right here and right here, is a major area of support. If you do come down and retest it, be careful because it could break at that point. Now, again, the interesting thing is going to be in the closing hours of this trading day. We have about an hour and 45 minutes left to see where this market ends up. So far in this new year, especially over the last 2 weeks, this market has not been able to hold any of the gains. It has been very problematic in that sense, and you want to see if it can hold it today. Can it hold it today as we slowly sell off here a little bit? Spiders are still up about $1.15 on the day or so, so it's still a big gain, but overall you have to look at that and say, can this market hold? Should it come back in, be ready. More plays will be released. I had a list of over 20 plays produced over the weekend to look for today. Again, all those plays having huge bounces. They're all plays that we talked about late last week as well in the Research Center, Hot Charts and Alerts, Pro Trader Watch List. All of them performing extremely well today. Those plays will be in play again should the market come back in here, so be ready for that as well. Exxon Mobil continues to be up about $1.80 on the day. That is a driving force. In addition, another force in this market is the dollar. The dollar I did go bearish on per Friday when it pierced the 200 moving average on the daily chart. I can show you that quickly right here. That's where I went bearish, and you can see a little bit of a pullback coming in on the UUP down about 9 cents. That's the dollar index. That's also helping oil make a move up, gold make a move up. All those things moving to the upside are helping keep this market afloat. All right, big deal. The dollar is a big deal to this market. It has been for a long time, and it will continue to be. So between Exxon Mobil, consumer spending and income numbers, and the dollar weaker, that's your formula right now for why the market is up on the day. The question again is, can it hold it into the close? I will be releasing more hot charts and alerts tonight to set yourselves up for tomorrow's trades on swing trade basis, investment basis, and day trade basis. Be ready, folks. It's going to be a continued profitable 2010. Unbelievable profits for everyone out there within themoneystocks.com. Talk to you soon, guys. Take care.